Welcome to Dime Dive. Ever wondered why personal loan interest rates vary so much? Well, let's dive into that. Interest rates for personal loans aren't one size fits all. They can swing dramatically, primarily based on your credit score. Yes, your credit score can be the deal maker or breaker here. Lenders consider it a measure of your credit worthiness, and a higher score can fetch you a lower interest rate. But remember, a low interest rate is just one piece of the puzzle. Don't let a seemingly attractive rate blind you. High interest rates can be a red flag, signaling a high total cost of the loan. It's vital to consider the whole picture: the principal, the interest, and the fees. All these elements combined determine the total cost of your loan over its duration. So, before you sign up for a personal loan, make sure you understand how interest rates work. Knowledge is power, and in this case, it could save you a pretty penny. Did you know that paying off your loan early could actually cost you? It's a common misconception that paying off a loan ahead of schedule is always a good thing. However, some loan agreements include what's known as an early payoff penalty. This is a fee that lenders may impose if you decide to pay off your loan before the end of the agreed-upon term. It's their way of recouping some of the interest they would have earned had you stuck to the original payment schedule. Now, not all loans have these penalties, but many do. So it's vital to review the loan terms carefully before you sign on the dotted line. Look for phrases like prepayment penalty or early payoff fee. If you're unsure, don't hesitate to ask your lender directly. Remember, when it comes to loans, always read the fine print. Have you considered the upfront fees that come with securing a loan? It's not just about the interest rates, folks. When you're on the hunt for a personal loan, one of the first things you should be looking at is the upfront origination fees. Now, you might be wondering, what's an origination fee? Well, it's a one-time charge that lenders impose to cover the cost of processing your loan. This fee can significantly impact the overall cost of your loan, making it more expensive than you initially anticipated. It's usually expressed as a percentage of the loan amount, typically ranging between 1% and 6%. So if you're borrowing $10,000 with a 3% origination fee, you're looking at an additional $300 tacked onto your loan. And remember, not all lenders charge the same fees. So before you sign on the dotted line, compare multiple loan options. Be sure to factor in all fees before accepting a loan offer. When it comes to loans, how much do you value your privacy? It's a question that often gets overlooked amid the scramble to secure funds. But it's crucial. Different lenders have different levels of formality when it comes to your privacy. Traditional banks and credit unions typically adhere to strict rules and regulations to protect your personal information. However, not all lenders are so stringent. Some may not respect your privacy as much as you'd like, potentially leaving your personal information exposed. So before you sign on that dotted line, do your due diligence. Research the lender's privacy policy. Check if they share data with third parties, ask questions, and most importantly, always be cautious. Don't be so eager to secure funds that you overlook the importance of your privacy, because in the end, your personal information is just as valuable as the loan you're seeking. Your privacy is important. Ensure it's respected when taking out a loan. Have you been offered insurance with your loan? It's not uncommon for lenders to pitch additional insurance to protect your loan in case of unexpected events. While this may sound like a safety net, it's crucial to be aware of the potential pitfalls. Firstly, this insurance often comes with an additional cost, which can add to your loan burden. Secondly, the coverage provided by this insurance may not be as comprehensive as you might assume. It's typically limited to certain situations such as job loss or disability, and may not cover other circumstances that could affect your ability to repay the loan. Instead of jumping at the first insurance offer that comes your way, consider exploring alternative options. For instance, general disability insurance often provides a broader coverage and could end up being a more cost-effective solution. Remember, the goal is to safeguard your financial health, not just your loan. So, evaluate all insurance options carefully. Do you know how your loan interest is calculated? It's a question that many overlook, but it's crucial when considering a personal loan. There are two main ways interest is calculated: pre-computed interest and simple interest. Pre-computed interest relies on the original payment schedule. This means the total interest is calculated at the beginning of the loan term based on the original amount borrowed. So even if you repay the loan early, you're still on the hook for the full interest cost. On the other hand, simple interest calculates interest based on the current loan balance. As you pay down the loan, the interest charge decreases. If you're planning to repay your loan early, this is a more favorable option because you'll end up paying less interest. So next time you're considering a personal loan, ask your lender how they calculate interest. Understanding how interest is calculated can save you money in the long run. Have you ever considered a payday loan? They might seem like a quick fix, but let's dive into the hidden dangers of these loans. Payday loans are notorious for their sky-high interest rates, which can sometimes reach three-digit percentages annually. It's like stepping into a financial trap, one that's incredibly difficult to escape from. And the terms? They're often far from favorable. Typically, you're expected to pay back the full amount plus interest by your next payday. This short repayment period leaves many borrowers struggling to meet the terms, causing them to take out additional loans and spiraling into a relentless cycle of debt. Moreover, payday loans don't help build credit, even if you manage to pay them off on time. This is because most payday lenders don't report on-time payments to the credit bureaus, so this short-term solution can leave you with long-term problems. In conclusion, avoid payday loans at all costs. They're often more trouble than they're worth. Is your loan offer too good to be true? Often, to make their products more appealing, lenders may bundle their loans with enticing offers. These can range from payment holidays to cashback offers. At first glance, these extras may seem like a bonus, but they are often just unnecessary complexities. These add-ons can make the loan terms more difficult to understand and may even lead to unexpected costs down the line. Remember, a personal loan should be a straightforward agreement between you and your lender. It should not involve any hidden terms or conditions that could potentially trip you up in the future. Always read the fine print and don't be afraid to ask questions. It's your right to fully understand what you're signing up for. So when considering a personal loan, look beyond the flashy offers. Seek out straightforward loan terms that align with your financial needs and comfort zone. Keep your loan simple. Avoid unnecessary complexities. Did you know applying for a loan could affect your credit score? Yes, indeed, it can. Whenever you apply for a personal loan, the lender usually conducts what's known as a hard credit check. This is a thorough review of your credit history, which can temporarily lower your credit score by up to 5 points. This might not seem like much, but if you're applying for multiple loans within a short time frame, these points can add up and significantly affect your creditworthiness. And it's not just the application process that can impact your score. Late or missed payments on your loan can also negatively affect your credit score. These late payments are often reported to credit bureaus, which then reflect in your credit report. This could make it more challenging to secure loans or credit cards in the future. So, before applying for that personal loan, remember to consider the potential impact on your credit score. Keep your credit score in mind when applying for a loan. Thinking about paying off your loan early? It might seem like a great way to get ahead and free yourself from debt. However, it's not always as simple as it sounds. Some lenders have a little trick up their sleeve. Early repayment penalties. These are fees that you might be charged if you decide to pay off your loan before the end of the agreed term. Why do they do this? Well, when you pay a loan back early, the lender loses out on some of the interest they would have earned if you had stuck to the original payment schedule. To compensate for this, they may charge an early repayment fee. So if you're considering paying off your loan early, take a moment to check the fine print. Review the loan agreement thoroughly and look for any mention of early repayment penalties. Paying off a loan early can be beneficial, but be aware of potential penalties. So, what's the bottom line on personal loans? Navigating the world of personal loans can feel like walking through a minefield. There's a multitude of factors to consider, from varying interest rates and early payoff penalties to upfront fees and privacy concerns. Then there's the potential for unnecessary complexities, the impact on your credit score, and the risk of predatory payday loans. It's clear that personal loans, while a convenient solution in some cases, are primarily designed to favor the lender. Therefore, it's essential to tread with caution. For non-essential purchases, consider the old-fashioned method of saving up. If you decide to proceed with a personal loan, arm yourself with knowledge. Understand the potential pitfalls and risks associated with the loan. A personal loan calculator can be a handy tool, helping you to determine the loan terms and monthly payments that fit comfortably within your budget. Remember, knowledge is power. Understand the risks before taking out a personal loan. Subscribe to Dime Dive.